case here, ladies and gentlemen, financial accounting has a historical orientation because we talk of financial accounts. For example, the income statement for the period ending, isn't it? For the period ending, for the period ending. So this one here is historical. Historical. Ladies and gentlemen, remember here we want to advise managers. And these managers here, we are going to advise them on the basis of what will be happening in the future. All right, so they can make future decisions in a very organized way. So this is historical, and this one here is what here somebody futuristic here. Thank you so much. Any other difference? I can see the online guys are really writing things. The standards, yes, great. This gentleman is able to remember. Ladies and gentlemen, remember that FA, you can't just wake up one day and then you tell us that we have an income statement where you're beginning with costs on top. No, here we are guided. Whenever it comes to FA, ladies and gentlemen, the structure is normally given. If it's income statement, we must start with sales. We less cost of sales. Even cost of sales has got an order to be followed. We have opening inventory. You add what here? Purchases, and then you less what here? Somebody closing. So FA is well guided by these international financial reporting standards, by the ISS. How about management accounting? Management accounting, ladies and gentlemen, really, the format is not that much. So this one is quite rigid because of the formats, which the standards guide us, and this one is very flexible, yes, very, very flexible. I mean, nobody's talking about regulations in terms of the law, that financial accounting is mandatory. This one here is required by the law. Every company, ladies and gentlemen, must produce what here? Financial statement, which must be furnished with the commission of what here? Taxes. That is KRA. Management accounting, of course, in this case is voluntary. That is why in this particular class, if I was to ask, is there anybody here who is a management accountant in their company? No. But financial accounting, most of you are doing financial account because, you know, people would want to save, isn't it? People would want to save because they want to save. They would not employ management to who? Management accountants. Now, if you look at your WhatsApp, ladies and gentlemen, you have the notes that I'll be using. You have the notes which I'll be using. You have the notes which I'll be using. Are you able to see those notes? Are you able to see your WhatsApp? She told me you have WhatsApp. Have they come? Have they come? Have they come? Have you added these new people to the group? So everybody's added, So I would want you to print. Yeah, you guys have to squeeze a little bit. This room is smaller. It's a good blessing. This room is smaller. This room is smaller. And I'll be able to know what to do with my camera. So those notes, I would want you to open them. I would want you to open those notes. We shall be using those notes if possible. Print them because in my class, we don't write notes. In my class, we depend on that handout throughout. You will like it. You will like it. You will like it. That one I know. And then I would want us, if possible, we go straight away to what they are calling there. Page number 2, 1.8, limitations of management accounting. Limitations of management accounting. Are you able to see? Limitations of management accounting. We are saying that management accounting is a very, very good subject. I don't know whether I'm recording. And by the way, are you able to access all our videos on the learning management system? You haven't yet been added. You need to be added so that there are videos I would want you to be watching even before you come here. So that here we can be tackling past paper questions most of the times. Most of the times. At least George has been connected here. How comes my physical students haven't yet been connected? That is wrong. So, ladies and gentlemen, I was trying to mention something here that management accounting is really a great subject. But there is nothing in this earth which doesn't have disadvantages. So whenever they ask us to give them limitations of this subject, we are going to state exactly what is on 1.8. So number 1, it is based on what here? estimates and assumptions. If, for example, you are doing a budget for Kenya today, and you're using this, of course, management accounting, because management accounting is the one that will be used to develop budgets, then you have to make so much in terms of estimations. You'll have to say, for example, in 2026, we're going to have this kind of number in our population. So there are a lot of assumptions, a lot of what you estimate. That's a disadvantage of the subject. Number two, ladies and gentlemen, this subject is so costly. Having to employ a management accountant in a company to do what is a yeah, don't worry. Yeah, if you panic a little bit, it doesn't now even shut down. You shall never panic at all. So it is a subject, a discipline that is quite costly. It requires the systems and what is somebody skilled staff. It relies on quality of financial and cost data. So if in this case here, your financial data is not of high quality, then the management reports cannot be okay. They cannot be okay. May be biased or influenced by management what year judgment. That this particular management accountant at times could be forced because of conflict of interest. So you'll get some directors who will come and tell you, hey, don't support that particular option. Say that option is bad. So we're saying that this subject, ladies and gentlemen, of ours can lead to some biased decisions because of what here, lack of independence of this particular management accountant. So we go to practice questions, of which I would want us to start with April 2024. Question number 2. If you don't have a past paper, no problem. It is already there. I've been able to type the question there. April 2024, question number 2A. They asked us to state 3 roles of management accounting in an organization. So without looking at my answers, could you kindly try any 3 roles of a management accountant or management accounting? Anything you say will be correct. That is a beautiful thing with these theory questions. If you're to be employed today as a management accountant of Safaricom, what do you think in this case here will be amongst the things that you'll be doing? I know one of them. A management accountant will always be involved in what we call cost ascertainment. We are the cost champions. So we'll be the ones here who will come and say, if we are making pens of this nature, how much will these pens cost us in the form of materials, labor, and overheads? So cost ascertainment, that is number 1. Number 2, planning. You don't have to write because they're there. Yeah, the management accountant will be involved in planning. Making budgets is preparing a plan, isn't it? Once this management accountant plans, he's been able to say, this is our building. This building, for example, this person is estimating that we shall be able to use like how many bags of cement to the end? 500. But you see now, this management accountant again will be able to oversee the implementation of this building. Yeah, so the actual, putting up of this building. So then actually, you'll be able to see, for example, the actual can't be exactly equal to the estimate. The actual, for example, we may end up using like 500 what here, somebody? 50 bags. So then what is the difference here? 50 bags. Is that good for the company or bad? Good or bad? We had estimated to use 500 bags of cement. We have used more. Because that's now costly for the company. So that is a bad variance. When you're trying to classify your variances into what we shall be calling adverse and favorable, at the end of the day, you are doing what we call controlling. Yeah, so please, the three applications of a management accountant, functions of a management accountant, you should never forget. Ya kwanza ni gani? Cost ascertainment. Number 2, tuko na planning. Number 3, tuko na controlling. And then, of course, if we ascertain the costs, we've said in this case here, this particular pen will be able to cost us like how much here? 10 bob. Automatically, for us to get selling price, what are we supposed to do? If you've known the cost is 10, what do you do to this cost to get it, change it to a selling price? You add a profit, isn't it? You add a profit, maybe profit of what here? 3, which then will end up giving us how much there, somebody? This 13 will be selling price. So I'm giving you a 4th function of a management accountant, which is what here? Fixing of selling price. So now you can read there, ladies and gentlemen. So number 1, we have ascertainment of cost. The management accountant will be able to determine product, process, and service costs for pricing and what here, somebody? Control. Number 2, price fixation. Provides cost data For setting selling prices by adding profit margins. Then number 3, we have performance measurement, uses standard costing, variance analysis, and budgets to assess efficiency. We have decision making, supplies data for make or buy, product mix, CVP analysis and special orders, planning and control, supports preparation of budgets, break even, and don't worry about those big terms. You'll be able to capture them as we move on with the syllabus. And the monitoring of variances, resource allocation, ensures funds, materials, and labor are directed to profitable what year activities. How does resource allocation come here? Because the management accountant is the one who will be doing a budget. When you're doing budget, you are allocating resources. Yes. We go to the next question that came from this topic. Here they wanted us to give them limitations of financial accounting addressed by who? By management accounting. By management accounting. Limitations of financial accounting that are addressed by management accounting. There are many, many limitations that financial accounts has. You see, financial accounting, ladies and gentlemen, makes the assumption that everything in life is all about money. That is why all the financial statements in this case here are monetary. That is why you guys always keep on, whenever you're doing your financial statements, you keep on saying in Kenya shillings thousands or Kenya shillings millions, isn't it? Because to you as financial accountants, everything in life is about what here? Money, 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 money. Now, is it true that everything in life is about money? Money is the most important thing in this world. What do you mean? I doubt. So do you want to tell me what we were discussing in our last class, that if you're a girl, a lady, you would rather in this case here cry every other day instead of Mercedes Benz? No. Money can never be everything. So in this case here, then management accounting is coming to cure this financial accounting loophole of mentioning that money is everything in life by adding qualitative factors. Yeah, qualitative, yeah. So in this case here, management accounting is able to bring in qualitative what here? Somebody factors here. It's not about just quantitative here. Would like, in this case here, the quality of life to be high up there. You don't want your daughter to be crying every day inside a Mercedes Benz, ladies and gentlemen, even if they give me a dowry of 20 million, isn't it? Quality of life really is important, isn't it? Now, that is number one. The other problem with this financial accounting as a limitation, this subject of ours is what here? Somebody historical. So MA is coming to cure this, because now MA will come and complement this. Look at the numbers that we have here. And then for MA, we look at what here? Somebody future. Financial accounting doesn't talk about controls. Financial accounting is purely the concept of recording the financial transactions and giving us reports. For management accounting, control is normally the center thing in the engine here. So controls here, and so many other factors that we've been able to list in this question. Remember, if you don't master theory in management accounting, I will keep on teaching you many semesters the same paper. Because you see, for us, management accounting theory will be about 35%. So, and our pass mark is about 40 or something around there. So if you get 35 in theory, how many are you looking for to be able to survive? Yeah, maybe 10, isn't it? You survive very well. And for us, it doesn't matter so long as you pass. That is what we want. We will not come and say that, you are a management accountant who passed because of theory. No. It is the end, isn't it? The means here we don't want to know. Yeah. So you can see there the limitations. Of course, there are so many, but they're only given us 3. Explain 3 limitations of financial accounting addressed by management accounting. Number 1 is lack of cost detail. Financial accounting is broad, while management accounting gives detailed departmental and the product what here? Somebody costs. Financial accounting doesn't give costs. It doesn't. Now, poor cost control. Financial accounts doesn't control material, labor, or overhead. Management accounting applies budgets and what here? Standards. As you said, if you remember very well, I sent some teacher here, I was not available. You were able to do this concept of cost behavior. Do you remember the behavioral classification? Yeah, where in this case here, we are able to classify our costs into variable, fixed. You see, financial accounting doesn't do that. Management accounting does that, isn't it? Management accounting is able to do that. No cost behavioral analysis. Financial accounts doesn't classify costs. Management accounting splits into fixed and variable for better what year? For better analysis. Weak performance evaluation. Weak performance evaluation. Financial accounts doesn't even measure this departmental efficiency. Management accounting uses what we shall be calling responsibility what year? Centers. Historical orientation. Financial accounts looks backward. Management accounts is forward looking with budgets and what year somebody forecasts. Then they want us to differentiate between a cost center and a profit center. A cost center and a profit center. Is there somebody who has ever heard of those terminologies? Again, you should never think so hard because this is just English. Don't tell me that we haven't covered that. This is just English. Cost center, center of costs. A center of what? Your profit. Very, very easy. Now, let me give you a story, ladies and gentlemen. You see, these companies here, how they are structured. We'll have a company that has, for example, 2 departments. We are producing chairs. So in this case here, we have a manufacturing department. A manufacturing department. After we manufacture, we transfer everything and sell, or rather, we transfer everything to this other department that we are calling what? Somebody marketing. So now the marketing and selling department will be able to sell this. Now, you see, this one is what we would call a landlocked department. Why is it landlocked? It is not exposed to any external customers. So this one has only one customer who is an internal customer. You manufacture everything, you transfer internal, isn't it? How about marketing? Marketing in this case is the one that will be able to get the money, isn't it? Yeah. So this one here, marketing, it is going to generate revenue and it has its own what here? Costs. How about this one here, manufacturing? It only has cost, isn't it? So then this one here will be called a cost what here? A cost center. And this one here will be called what here? A profit center. So basically, for a cost center, you as a manager, you are only in charge of what here? Somebody? Costs. So you can only control costs. And then now we have what we are calling a profit center, which is that department which is able to generate its revenues, and at the same time it has got what here? Somebody? Costs. So basically you are in charge of controlling the profits of an organization. You have decisions to make regarding your revenues. How much do I charge? What do I do here to control? So you have quite a lot. And again, we have what we shall be calling later on investment center. Investment center now is quite a nice one. Now, if this was to become an investment center, the person who is here in charge, after he gets profits, he'll be able to decide like, how is this profit going to be invested? Do we invest some of this money in a money market fund? Do we take some of this money into fixed deposits with banks? Do we buy government bonds? So that becomes now what? An investment center. So a cost center we are reading there is a unit where managers are accountable for controllable costs. They're accountable for what? Yeah, somebody? Controllable cost. Even if you forget the word controllable, and then you say that we will only be accountable for what? Yeah, because we don't have access to external customers. The only thing we know are what? Yeah, costs. And then we have profit center, a unit where managers are responsible for both revenues and what? Yeah, somebody? Both revenues and cost. And good students of management accounting shall be able to know how to give those answers in their own way. In their own way. Don't start cramming. My students shall never cram anything. So in this case, if they ask you about an investment center, it's a profit center where the manager now has a responsibility of making investment. He'll be able to decide the profit that has been realized. How will this profit be treated? Do we stay with this money here? Do we take it offshore and invest in outside there? Now, December 2022, I can see so many charts here. Just give me 1 minute. I see what these students are telling me online. I see what they're telling me online. Yeah, this is topic number 1, and it's applicable for ATD and what year? CPA. ATD and CPA, yes. Benefits of a good cost accounting system. That is December 2022, question number 5. Yeah, benefits of a good cost accounting what year? System. don't even look at it from cost accounting system. Just look at it from any systems that you guys have in your workplaces. Why should we procure QuickBooks? Why should we have an ERP system in our company? Enterprise resource planning systems in our company. So for example, if I have an enterprise resource planning system in my company, it shall be able to help me, for example, manage my inventories. Because if it's ERP, you will be able to set what we call stock levels. Once we hit this stock level, you don't want to run out of what you stock, you initiate an order. Don't write anything. Yeah. Advantages of systems. So advantages of systems, ladies and gentlemen, for example, use them if it's a cost accounting system to determine what your costs. To fix what you're selling price, I'll be able to do that automatically. I'll be able to use my systems here if I have those dashboards on my screen to measure performance of my employees, performance of my departments. That is the same language like asking you functions of a management accountant here. So if you look at this, ladies and gentlemen, highlight 6 benefits of establishing a good cost accounting system. 8 in competition. It helps us to cut waste, improve efficiency, and survive during what is somebody depression. Ladies and gentlemen, remember in this case here, we have this gentleman in management who said that for you to be able to survive in any economy as an organization, there are 2 things you can do. This guy is called Michael Porter. Michael Porter said as an organization, for you to survive, it is either number 1, you become a cost leader, or in this case here, you really do what you differentiate yourself from the competitors. So cost leader, ukuwe mtu wa kufinya maneno sana, utaki kuspend pesa kabisa. Yeah, then in that case, you can easily survive. Or you differentiate your products and get into what we call the blue ocean. Have you ever heard of red ocean and blue ocean? Red ocean, if you look at, for example, the ocean in Mombasa, near the shore, hapa karibu, maji ni chafu. Sababu kuna watu wengi, iko watu wana swim, wengine wanafanya nini, wanatembea hapo, iko vitu mingi sana, hata mamba iko hapo karibu. Yeah, so in that case here, we have so many competitors who are really killing each other. So in that case here, the ocean becomes what here? Red. But if you've been able to differentiate very well, you'll be able to get really into the depths of what here, this ocean, inside there yonder, the ocean will be what here? Blue. So there is no competition. Look at great companies that are already playing in this league. Like for example, Safaricom, remember the late Raila, may the Lord rest his soul in peace. He came and told us that resist some companies. And the people resisted some companies, like Brookside was so much resisted, isn't it? He also said resist Safaricom. In the same year when he said resist Safaricom, despite him being very, very powerful, what happened, ladies and gentlemen, on that same year, Safaricom's revenue grew by 10%. Where do you think in this case here that happened despite his immense powers? Because already Safaricom has been able to do what to differentiate it. It's already in the blue ocean. You can't kill it. You can't kill it. But like Brookside in this case here, their revenues went down by over 50% because other regions said, no, don't even bring this milk here. All right. So this is the concept of management accounting. We have in this case here to get systems which are going to ensure that we are cost leaders here. Number 2, if we have a cost accounting system, price fixation will never be an issue. Supplies cost data for setting fair and competitive prices. Reliable estimates because of the concept of budgeting. Yeah, and the setting up of quotations. So reliable estimates provides a sound basis for tenders and quotations, identifies profitable activities, distinguishes profitable from non-profitable products, waste elimination, detects wastage in materials, time and overheads, seeks comparisons, enables inter-period and interdepartmental performance comparison, helps efficiency, highlights idle time of employees, poor supervision and inefficiency, inventory and cost cost control, maintains effective control over stocks and work in somebody work in progress. Ladies and gentlemen, most of these theories of management accounting, they are basically grounded on functions of a management accountant. Once you know the functions of management accountant, even if they ask you regarding this concept of advantages or functions of somebody, a cost system computerized system, whatever system they ask about, you'll be able to come and see that this system will help us ascertain costs. It will help us, in this case here, fix prices. It will be able to help us control our activities and stuff. So much, it will be able to help us, in this case here, do whatever, a budget. All those points will always be correct. Correct, yes. So I don't want any student here to start cramming anything here. So with your permission, ladies and gentlemen, we shall be able to continue. So August 2022, question number 5A, uses management accounting information. Now, without you guys reading, are you able to give me these uses of management accounting information? Planning, controlling, and I will be able also to give you some other way of remembering this. You know, yeah, POC, yes. Great. So we have, in this case here, functions of management. Yeah, that if I have management accounting, I will be able to use management accounting for doing what? Somebody planning, organizing. Yes, I'll be able to organize my stuff very well because I know my costs, etc. Controlling, yes. Coordination, isn't it? Coordination between departments, yes. And then lastly, we have here what here? Communication. So because you know your costs and you know your staff very well, then you become a good communicator. Remember, most systems, including marriages, they break because of what here? Poor communication, yes. Poor communication. So you get yourself telling people that let's get into this business, we'll be able to make profit, and then you're not able to deliver the profits. But the moment you have a system, the moment you have this management accounting information, then your communication will be perfect. And then once you have this kind of points, then come and add the others that you know, like which one here, cost ascertainment, issues to do with the I'll be able to use this management accounting information here to do pricing. Then you'll be able to get 10 out of 10. Once you get 10 out of 10, how many marks are we looking for? 40, yeah? Because you believe it's 50. You believe it's 50. If it were 50, some of you would not be here today. Because there are papers like, have you ever tried financial management? Last semester. Yeah, you passed, but the paper was quite tough, isn't it? Yeah. At times the pass mark even goes down to something that I can't even mention here. So what matters most, ladies and gentlemen, in discussing the papers is your confidence. If you're very, very confident, then everything will always be what you have, will always be okay. So you can see, ladies and gentlemen, there uses there, decision making evaluates alternatives for rational choices, planning, guide strategy and goal setting, controlling, future reference, performance appraisal. Never forget to mention decision making, then performance appraisal. Those are very, very important. I think I've tackled enough questions and I can go to the next topic, because my aim is to, you can see there are similarities between cost accounting and financial accounting. Are they similar? Yes. In decision making, both provide useful information for management. Guidelines. Both follow recognized what rules. Even if management accounting is quite flexible, it still follows what we call CIMA. CIMA stands for Chartered Institute of Management Accountants. Chartered Institute of Management Accountants. So both somehow they follow recognized rules. Both are useful in terms of recording and what somebody reporting. Both involve systematic recording of what transactions, profit determination. Both contribute profit calculation and the financial performance what somebody. Even costing, because in financial accounting we still have to do what we call cost of what sales. We have cost of sales in financial accounting, isn't it? Of course we don't get into granularity, very detailed, but still are able to do costing there. Similarities. All right. April 2022, question number 3A. Challenges in installing a cost accounting system. Are you able to give me those challenges? Try to give me the ones that are not there. Try to give me the ones that are not there. Challenges. When you want to install any accounting system, it will be costing. Challenges. I know one of them. Yeah, costly. Actually, just lump everything there about what you call. They are normally very costly. A good ERP system, like for RCM right now, will not go for less than 10 million. Good ERP system, they are very, very costly. Great. That's number one. Number two, they require lots of skilled labor. Skilled labor. Ladies and gentlemen, I've been in this industry for so long. I'm 100% sure. Like right now, I'm training about 500 students who are doing this MA. Most of you, of course, are online. By the time you finish, because most of you will just be theoretical accountants, by the time we finish, out of these 500, it's only like 10 of you will be practicing what year accounts because of lack of skills. Because some of you are just there combining 6 papers, running, you finish, and then you get into a marketing job, isn't it? Yeah, getting skilled labor in this industry is not easy. People know how to run this ERP. If it is Excel, people, for example, who know how to do pivot tables. Is there anybody who knows how to do a pivot table? We shall overcome, right? An accountant is supposed to be good. An accountant is supposed to, for example, be knowing how to do the Python, isn't it? Yeah, little programming here and there. It is so skilled labor. Getting people to be able to, run these systems is not easy. The moment you have that concept of costly, and then we have what here? Concept of skills, isn't it? Then automatically you have some few marks there. I can see my online students are talking there. What are they telling me there? 1 minute. We're still doing topic number one. Topic number one. Don't worry, I'm a chief ninja. I'll be able to clear this very, very fast. Then, ladies and gentlemen, of course, you know that anytime you are, anytime in this case here, you are putting up any systems, the tone at the top is really, really important, isn't it? The managers, are they supporting the system? If they're not supporting the system, then that system will not be able to. And what do we say about most managers outside here? Most of them are thieves, isn't it? Huh? Can you kindly touch your chin? Touch your chin. Please touch your chin. This is not the chin. The chin is this one, isn't it? Why did you touch this one as a chin? It's because I'm your leader here, isn't it? You copied the leader, isn't it? Yeah. And as managers outside there, then if you are showing these people that stealing is okay, then everybody will steal. So the system will not work. So internal control systems will not work. Again, ladies and gentlemen, remember, you can still come under install a system, but again, it becomes ineffective here. It becomes ineffective. Yeah. Because in this case here, perhaps there was one of the directors again who was conflicted. Yeah, they were simply telling you buy this, because they are taking some 5 million, isn't it? Then you bring it here, it becomes a white elephant. It becomes a white elephant. All right. So we go to topic number 2. I'm so sure you are done this, but it's good. I just brushed through it very fast with your permission. And then at the end of every topic, if you want to pass, you must do at least 8 questions. At the end of each topic, you must do at least 8 questions. So topic number 2, costing terms and what here? Concepts. Ladies and gentlemen, what is the cost? We have said so much about this cost. What is a cost? When you say that it's going to cost you, for example, 100 shillings for you to reach home today, you're buying a service. Of course, this will be the resources you are sacrificing for you to acquire a product or what? Somebody, a service, yes. For you to acquire a product or a service. This could be in terms of money. Yeah, we are told there. A cost refers to the monetary value of resources such as money, time, labor, etc., that are sacrificed to acquire or produce goods and services. It is essentially the measure of economic resources consumed to achieve a specific objective. Then we have what we call direct costs and what is somebody? Indirect costs. So direct costs, if I can just remind you from your high school, I can see all of you here very, very young. You must have cleared your high school last year. Just like myself, isn't it? Yeah. So when we talk of a direct relationship, if this is X and this is Y, this relationship can only be direct if as X increases, what is happening to Y? Y is increasing, yes. Y increases as well. That is also what happens to these direct costs. So direct costs are those type of costs that will increase as the volume of production does what? Yeah, it increases. Just like, for example, this college. Very soon, we shall be giving you past papers. So when we print this past paper per student, let's assume the printing cost will be how much? 100. So if you will be 20 of you, so then the school will incur how much? 20 times 100, which is what year? 2,000. If, for example, this class grows to 100, then the cost will be 100 times what year, somebody? Which will be 10. So then you can see that this printing costs is growing as the number of students is doing what year? That's our direct cost. Direct cost in this case here, they are directly proportional to the number of units. Directly proportional to the number of units. How about in this case here, rent? Rent automatically becomes an indirect what here? Indirect cost. Because rent, ladies and gentlemen, assuming this room we are paying 20,000 for this room. And then the whole semester, we get in this case here, one student. Shall we go to a landlord kneeling down, telling the landlord, hey, the business was very bad, the charge us 1,000? Will he accept? No, because rent is periodical. It's payable on a monthly basis, regardless of our volume of activities. So then this becomes what we call an indirect what here? Indirect costs do not have any association with the volume of production. You produce 0, you still pay it. You produce whatever, you still pay it. I hope you are able to follow so far, right? Yeah. So costs that can be traced specifically and exclusively to a particular product, job, or service or department are what we call direct costs. Yeah, like the cost of flour used in baking bread. The more the loaves of bread we bake, the more the flour, isn't it? Or wages paid to workers directly assembling a car. So those wages, the more the cars they produce, the more they weigh. Those are direct expenses. Indirect costs for what we shall be calling overheads, 𝐢𝐧𝐫𝐢𝐞𝐬. These are costs that are incurred in the production process, but cannot be traced to a single product in an economically feasible way. Instead, they are apportioned across multiple what year outputs. So in this case here, for example, the rent that we pay here, if you're paying this rent of 20,000, you can't say that this 20,000 was paid by this student or by, no. You guys are able to put up together this money in the form of school fees. And then from that particular bucket, we want to pay what here. But there are expenses for sure that we shall be able to trace to you. And they say that, for example, if this is a high school, this girl came here and we gave her uniform worth this amount. So that's a direct expense. For example, if we are paying our teachers on a monthly basis, we are paying our teachers, for example, like 300 Kenya shillings per month. And then we happen to get like very few students. Shall we bargain this amount with our teachers? No, it's monthly. As we shall see, ladies and gentlemen, all indirect costs are periodic in nature. We pay them periodically. It could be monthly, quarterly, yearly. Is that okay? That's why we are calling them what here? Somebody overheads. They are on top of every person there. Overheads. Then we have cost classification, where you can see we have direct versus what here? Indirect. I don't have to belabor there. Yeah. We have fixed versus what here? Somebody? Variable. The same. What are fixed costs? You shall always look at me because remember in my class management accounting, I also teach advanced management accounting, etc. In my class, I must always get number 1. And for you to become number 1 nationally, you shall never be shy. Even when you don't understand, when you know nothing, that's when you shout most. That's when you shout most, because by talking like this, you shall shine, isn't it? Yes. Yes. So fixed costs are those costs that remain what here? Constant? Constant. They remain constant regardless of the number of units that are produced. And then you will end up giving us an example like what here somebody rents. Good example is rent or salaries per month, etc. Variable costs, as the name, ladies and gentlemen, suggests there, variable costs are those costs that do what here? They change. As output in this case here changes, they vary. Variable costs change as well. Variable costs are also known as what here? Direct costs. This one is quite a tough one, ladies and gentlemen. This is quite a tough one, but before I continue, I would want to know whether my online students are able to follow me. My online students, I would want to know whether you are able to follow me. Please type there Y for yes. Yeah, you can also use emojis always. Actually, I love emojis so much. When you are happy, the smiling emoji. Yeah, if you're not able to really follow what you do, this one here. Yeah. So the emojis there, or even like this. The emojis, they're able to follow. Thank you so much. Thank you so much. Thank you so much. So then we continue. This one is quite a tough one. Many students are not able, in this case here, to differentiate between product and the period what year? Period costs. So period costs are never tied to inventories. Periodic costs are never tied to what we produce as a company. They are always tied to time. So periodic costs are what are time-based. For example, we pay salaries on a monthly basis. And the periodic costs, because they are not dependent on the volume we produce, they can never become part of inventory. Periodic costs can never become part of inventory because, inventory is a non-issue, is a non-factor. These periodic costs, they're always what you fixed. We shall always expense them in the income statement. I will start by reading periodic costs there. So periodic costs expensed immediately in the period they are incurred. They are not tied to production. Example, in this case here, advertisement, administration, what here, somebody? Salaries. Product costs are costs that are capitalized as inventory and expensed when goods are sold. Like direct materials, factory, what here, somebody? Overheads. Please listen and listen to me very well. Listen and listen to me very well. We have our income statement. So in our income statement, if you remember very well, what do we normally write? So we have income statement or statement of comprehensive incomes. So we start with revenue. And then we go to cost of what here? Goods sold, isn't it? Cost of goods sold for us to get gross what here? Gross profit. And then now we come to expenses. So these expenses are like the administration, etc. Post-production, isn't it? So please listen, whenever it comes to product and the periodic costs normally come under what here? Expenses. They shall never become part of this because they are not part of production. Then they come post-production, like distribution costs. You see, you start distributing out your produced. So these expenses will never go and become part of inventory costs. So when we are doing that FIFO, whatever we shall be doing those things here, it is only product costs that will become part of cost of what here? Cost of sales. So product costs are also known as inventory costs. Inventory cost. They shall be used for inventory valuation. They shall be used for inventory valuation. They shall be used for inventory valuation, whereas periodic costs, ladies and gentlemen, because they are time-based and they are post-production, all of them shall always be done what year? Somebody expensed in the income statement for that year, like that. So that will become clearer as we progress. Thank you so much, Geoffrey. All right. Now, ladies and gentlemen, from there, we have a classification of costs on basis of what here be? How do they be? No. Basis of classification, isn't it? So basis of classification, we classify costs by time. So by time, we shall always have two types of costs. Past costs and what here? Future. Historical and future costs, like that. So historical costs, actual costs incurred in the past, used for reporting and the variance analysis. Then we have future costs, which are determined estimated or budget costs used in planning and standard costing. Then we have number 2. The second classification is by what here, somebody? Behavior. Under behavioral classification, we have 4 types of costs. Are you able to remember them? Because you've done them with my colleague. Behavioral classification, we have fixed. They behave in a funny way. That goods produced are increasing by the day, but fixed costs are ever cost. That's a funny behavior. Funny behavior. So fixed costs, constant in total. Yeah, just mention constant in total. Leave alone that decrease. Constant in total. Always it's constant. That is fixed cost. How about variable costs? They also behave in a funny way, isn't it? They fluctuate. They fluctuate, yes. And then, ladies and gentlemen, we have what they are calling semi-what here, somebody? Semi-variable. How do they behave, semi-variable costs? Yeah, they exhibit both characteristics now, isn't it? Yeah, semi-variable. Please listen. When we talk of fixed costs, this is how they behave. This is how they behave. They are ever what here? Constant. They are ever constant. Then we have in this particular case, ladies and gentlemen, variable costs which behave like this. As output is increasing, what is happening to this cost? Increasing. If we produce 0, variable cost will be what here? 0. Then now we have another behavioral classification, or what we call, ladies and gentlemen, here, semi-who? Semi-variable. Semi-variable cost. So semi-variable from the word semi. For those of you who play football, semi means what here? Like half time, isn't it? Partly. So semi-variable costs are those costs which are partly variable and partly who? Fixed. They are partly variable and partly fixed. So partly variable, and then partly what here? Partly fixed, like that. Great. So are you able to give me an example of a semi-variable cost? Yes. Like electricity cost. Kama saa Mungu akikubariki, for example, useme wewe na familia yako yote come for example from next month mtaenda Dubai mkae miezi 3. So familia yote imefunga nyumba kabisa hapa Kenya. So mkiwa Dubai miezi 3, stima itakuwa inakuja 0. What will be happening to it? Kutakuwa na kitu ambayo inalipwa, ita accrue, isn't it? The meter rental charge. Inakuwa siku hizi pesa ngapi? Is it 120? Ama washaongeza siku hizi tunaongeza ovyo ovyo. Wameongeza kweli? I think it's 120, isn't it? So even if you don't use any kilowatts, this 120 is the bare minimum. All right. So then if I come and dissect my meter bill very well, then I will be able to have these 2 components. We have here what here, somebody? Fixed cost. And then we have what here, somebody? Variable. Now this component variable will be dependent on the number of what here, kilowatt hours. Yeah. The more I use, the more but fixed will always be what here, somebody? Fixed like that. Now, watu ambao waelewi sana kitu ya semi-variable cost, you always get them there at Kenya Power, always crying that I never used anything. Why are you still charging me? But these people have given you their machines, their meters, isn't it? You have to pay some rental fees for them. That rental fee is fixed and applicable to everybody. So there are those costs, ladies and gentlemen, that have to be done what year, have to be in a card. Whether you like it or what year, whether you like it or not, they have to be in a card. So that is semi-variable. And then, ladies and gentlemen, lastly, which wasn't captured here, this you have to write somewhere. I don't know where to write this. The stepped, isn't it? The stepped fixed cost. The stepped fixed cost is an ile staircase. Ile staircase. Because kwa staircase ndio tuko na step, ndio tuko na steps. Kwa staircase ndio tuko na steps. Kwa staircase ndio tuko na steps. Kwa staircase ndio tuko na steps. Yani step unakuja unakanyaga namna hii, unakanyaga hivyo. So inakuwa ni stepped fixed cost. So stepped fixed cost, ladies and gentlemen, they remain constant for some range, beyond which they increase in a lump sum amount. So stepped fixed costs, they remain constant. They remain constant for what here, somebody? Some range, beyond which they increase beyond which they increase in a lump sum amount. Beyond which they increase in what, here somebody? A lump sum amount. So stepped fixed costs, they remain constant for some range. So of course, I'm finished writing that. They remain constant for some range beyond which they increase in a lump sum amount. So the lump sum is the step. The step. So for example, we agree with my landlord here. We agree with my landlord here, and they say that, ladies and gentlemen, that if, for example, I'm going to get 20 students, you give me just one room, and this room I'll be paying how much here? 20K. But should these students in this case here, for example, exceed how many? Say 50. Then, Mr. Landlord, I'll come for another room. And when I come for another room, you'll be able to increase your rent by what? Here, somebody 10. So that now moving forward for the 2 steps, I'll be paying rent of how much if you're following? 30, because I have 20 and 10, like that. So you can see the rent was constant for some range. Beyond that range, went up like so. You have those steps like that. Yeah, and at times in this case here, this step fixed costs, they're also known as what? Your semi-fixed costs. If you see, you'll see in your past papers, the examiner calling them semi-fixed. Of course, this is confusing because you may think semi-fixed is partly variable and partly what here? Fixed. No. Because they will tell you to differentiate between semi-fixed and a semi-variable. So semi-fixed, don't forget that semi-fixed are what? Yes, fixed cost. Here you can see there's nothing that is varying. Only an increase in what here? In lump sum. Yeah, can I get the notes? And yeah. These notes are yours. I will be able to attach them here, so don't worry. I'll be able to attach them here. Don't worry. All right. So, ladies and gentlemen, we are through with that. Then we have by functions, management functions. You know, like how we do administration. Those are functions of management, isn't it? Functions of a company. So we have administration, we have distribution costs, we have finance costs by function. So by function, manufacturing costs, I love this. So by function, we have production or manufacturing costs. These are directly linked to manufacturing. Then we have administration costs, general office and management. Then we have selling and what here, somebody? Distribution, marketing, advertising, delivery. Then we have costs for RAS, finance costs, interest expenses, bank charges, etc. So whenever you hear of function, those are basically the functions of a company. What do we do in these companies? Number one is to produce. So then we have in this case here production or manufacturing what here? Costs. After that, we go to administrative costs, distribution costs, finance costs. It is those functions. Very, very key. Number 4, in this case here, classification of costs by relation to stock. Product costs recorded in inventory until sold. Period costs expensed in period in card. By decision relevance. Decision relevance, we have those costs that are relevant and others are what here? Irrelevant. So relevant costs, these are costs that are futuristic in nature. Future costs that differ between alternatives, important for decision making. And then irrelevant costs, which are also known as sunk costs. Sunk costs. Sunk costs. In this case here, they don't affect what here? Decisions. A very, very good example, ladies and gentlemen, and I've always gotten people who never understand very well this concept of sunk costs. So you'll get somebody comes to us, and by the way, I'm also a civil engineer. I did civil engineering and CPA, but now I'm eating majorly from CPA. So someone will come and ask for drawings. So we have what we call structural drawings. First of all, you start with architectural drawings. That guy will come and give you a very beautiful design. It tells you this is high rise, it look like this. So that's an architectural drawing. And then now we have these structures. Now we'll be the ones who will be doing these columns, isn't it? The beams, isn't it? Yeah, so someone will come and ask for those drawings. Those drawings, depending on the size of the house, they're quite pricey. So someone will come and pump in like 5 million. Takes these drawings, for example, to City Hall for approval. Abracadabra, you know what happens there at City Hall? abracadabra, the drawings are rejected. Perhaps he's told even this land that he wanted to build there is not his land, isn't it? So will this gentleman come back for his 5 million from the architect, from the quantity surveyor, from the structural engineer? Yeah, most of them will come back to us, imagine, saying that this thing has not been approved. And then we always remind them that was a sunk cost. Yeah, that was a sunk cost because as we delivered. All right. So sunk costs, and there are so many costs, like costs to do with feasibility studies. Any costs to do with feasibility, you have hired people to come and do an assessment and see as to whether whatever project you want to engage in is feasible. Yeah, if they come and tell you that the project is not feasible, you can't tell them to refund because whatever you have paid them now is historical. That automatically is what is sunk. It's irrelevant costs. It is irrelevant cost. Yes, a very good question there from George. Is semi-variable cost the same as mixed cost? Yes. Semi-variable cost mentioned there, they are the same as what here. You simply write semi-variable cost equals mixed costs equals mixed cost. Thank you very much for that question. Thank you very much for that question. All right. Then we have, ladies and gentlemen, classification of costs by management what here? Control. So by management control, we have two types of costs there. We have controllable cost and what here, somebody? There are those costs you as management can control. You have a say over them. A very good example of controllable costs will be variable costs, advertisement costs, training costs. Those are controllable because they are at the discretion of who? Management. Management can say, hey, this year we are not advertising and we shall not advertise. That cost will not be incurred. But can management say, hey, this year we will not pay rent? Then you will be evicted, isn't it? So it means that rent automatically becomes what? Uncontrollable. Rent becomes uncontrollable. So those expenses that can be influenced by management, those expenses, ladies and gentlemen, are said to be what here? Controllable. If they cannot be influenced, then automatically they are what here? Somebody? Uncontrollable. So if they are following, allow Mwalimu to move on because these topics you'll realize most teachers provide a handout for students to read. But for me, they normally form the base. I like just going through this handout pretty fast. Ama mnataka kujisomea peke yenu hizi vitu? Tawasumbua sana. Types of costing systems, ladies and gentlemen, these ones I'll be doing them because like now we have a topic called job costing, process costing. Those ones I'll be doing them as I do the topics. So those ones are not very important for now. Even ABC, I'll be doing this one later, activity-based costing. So shall we be able to take a break of how many minutes? 10 minutes for the Muslim to pray. They normally pray at 7. When we come back, we finish this topic and then we start now computations. Thank you so much. Great. We have to give way, right? Share screen. So maintaining a cost database. Why do we need a database? You know, a database, like for example, during elections the other time, we had a database of voters and of course how they voted, right? Yeah, and I remember one time in this case here, there was a guy called 𝐐𝐧𝐫𝐤𝐿, isn't it? 𝐐𝐧𝐫𝐤𝐿 was able to do so. So also for database, for cost, we need a database where we store. Yeah, so then in this case here, we are told maintaining a cost database. A cost database serves as a central repository of all cost information within an organization. The importance, it assists in preparing budgets because you have all the costs, right? Facilitates variance analysis, provides data for pricing decisions, enhances decision making through accurate what here? Cost insights. Characteristics of a good cost database. It shall be accurate. It shall be able to give us information on what year, on time, so that when you query it using what we call my SQL, yeah, you're querying this like the IBC database. How many times in this case did Jose Camargo get to this database? It should be able to return this on a timely basis, yes. Otherwise, it will not be friendly to us in terms of making decisions. Accessibility should be accessible, easily retrievable for users across what your departments. Now we can go, ladies and gentlemen, to past paper questions. We start with April 2025, where they asked us about cost behavior. Do you have the question? This guy should have put the question for me here. Do you have the question itself, like a past paper? Seems they don't have, eh? But basically they asked us about cost classification in accordance to what year behavior, of which we have fixed costs, variable costs, semi-variable, and then we have semi-what year somebody fixed, what they're also calling step what year costs. Then we have costs in decision making, where we have controllable costs, discretionary costs, committed costs, and controllable what year. Controllable costs are those costs that managers can influence directly. They can influence directly. Example, raw material usage. Managers can say, this year, we are using this quantity for materials. Discretionary costs are based on managerial policy choices. Example, training or what year somebody. So many students have always gotten this discretionary costs definition wrongly. Whenever you hear about discretionary costs, these are basically those costs that can only be incurred if the management wanted them to be incurred. If the management do not want them to be incurred, then these costs will be what year avoidable. They will be avoidable. So they are incurred at the discretion of the management. Kwa kupenda kwao. Kama management hawataki, haita. Kwa mfano, like now this year or last year, is there anybody who was sponsored by their organization to go and get some training? I'm so sure in the past years, training cost was a part of your budget, but the management sat down and said, slash this one. So it is basically incurred at the discretion of who? Management. Then we have committed costs. Committed costs, ladies and gentlemen, are those contractual costs which cannot be avoided in the short term. Let me give you a very, very good example of a committed costs. Assuming today you buy a motor vehicle, is it possible for you to go on the road without insurance? Not unless you're another one, isn't it? Or you don't understand the major issue of what are risks. So then insurance cost becomes a commitment on you, because every other year you have to keep on renewing your comprehensive what year insurance. So long as you're going to use the vehicle, then there is that commitment. Rent is a committed cost. The moment you have taken someone's house like this, when you have a lease, then you have an obligation, you're obligated to be paying what your rent. So committed costs are those costs that arise out of past contracts, which must be incurred if you without fail. If you fail, then automatically you are going to go against your contract. You shall be going against your contract. Then we have uncontrollable costs. Those are those costs that now which management cannot influence. Example, a government tax, yeah. Rent is the very best, isn't it? You can't influence. If you want to influence rent, then be ready to disappear from someone's what year? Yeah. So in this case here, we have those examples are very good. You must keep on giving them in your exams. So for example, dowry is a discretionary what? Is it mandatory? Is it mandatory? Well, okay, I know traditionally it's good because you'll be blessed, isn't it? Yeah, but these young men nowadays, are they paying that thing? Are they paying? Let's talk. No. Sure, then you must be very lucky if you got that paid for. You must be very lucky. Our age, yes, I know, but these young men know. So we have their business terms which came in December 2024. So they want us to define opportunity what year? Cost. Opportunity cost, like now you guys, I'm so sure for you to be here, you must have sacrificed something outside there. Yeah, for you to be here, I'm so sure lazima kuna mwanafunzi yako hapa. Kama hangekuwa hapa, ladies and gentlemen, angekuwa maybe somewhere na cut deal. So angecut deal, for example, apate 80,000. Lakini akachoose nini kuja kwa class. So you see, by being in class here, this person is losing what here? Somebody 80,000 here. So this is the opportunity that he has lost. Yeah, the value or the cost of what here the foregone alternative. Yes. Iko mtu angecut deal leo jioni, we shall overcome. So opportunity cost is the benefit of the next best alternative foregone. Example, if a factory is used to produce bread instead of biscuits, the lost profit from biscuits is the opportunity what year? Cost. Then we have opportunity savings. Yeah, the same case. And this is really practical, including my students who are online. I want to believe that assuming in this case here, there is somebody who takes some uji. You know, uji is a popular word now, isn't it? Yeah. Perhaps you were used to taking some uji in the evening. Do you know the uji I'm talking about? No, you guys are young at heart, right? Some alcohol, isn't it? Yeah, some alcohol. Yeah, meokoka, yeah, great. Some alcohol. So then you have two options here. So either you do alcohol this evening or you come to class. Usually by being in class, what have you done? You saved, isn't it? That's an opportunity saved. Yes, savings, yes. Is there somebody about, if I've assisted you then to save that way, you need to share the benefit with me. Yeah, tell me this thing would have cost me this much. Mwalimu kamara thao, isn't it? So opportunity savings achieved by selecting a cheaper what year alternative. Example, choosing road transport instead of what year somebody? Air freight, yes. Sunk costs, these are past costs already incurred and irrecoverable, hence irrelevant to current decisions. Incremental costs, these are additional costs arising from what year? A decision. Example, cost of producing one extra what year? Unit. Please listen here. Listen here. So you see, for example, we are making some product. Yes, these pens. If we produce 10 pens, and then the total cost is say 1,000, and then we produce 11 costs, and then the total cost, for example, is 1050. The 50 here is what you're calling an incremental cost. That additional cost in a card because you produced an extra unit, incremental cost. And if it is only one unit, later on, we shall be calling it marginal cost. You see, incremental cost, it could be cost increasing because of 5 units, 10 units. But when you are looking at incremental cost because of an additional 1 watt year, then it becomes marginal, which reminds me sometime back here. A student of mine, I think alikuwa ametoka kama nyinyi wanafunzi wa evening. Mimi nasema jina marginal, yeye akaandika hivi. Naona hivi. Kamsamea sababu sasa understand sasa hii mambo nikamcorrect polepole kaambia marginal namna hii. So additional cost of producing one more what ya somebody unit ya marginal cost. Nimesoma gani? Nimeruka. So that is an incremental cost, additional cost arising from a decision. Example, cost of producing one extra unit. Twende kwa hiyo ingine, August 2024, cost classifications. I will not look at this semi-variable. I've really explained this severally. Look at prime costs. Prime cost comes from the word what here? Primary. Primary is the most important basic education. Prime costs are those costs that are what here? Somebody. Direct costs, yeah? Yeah, but they are directly associated with what is being produced. Those are prime costs. So prime costs are variable costs as well. They're direct and they're whatever variable. So prime cost ni kama gani? Direct materials. Ingine ni gani? Direct labor. Anything that is what here direct. Hata wakisema direct overhead, still that will be a prime cost. a prime cost, yes. So prime cost, we are told there, these are all direct costs of production, direct materials, direct labor, and direct expense. Then we have marginal cost, and I define this for you. Additional cost of producing one what? One more unit. One more unit. Siongeze kizungu sana. Hiyo imetosha. So then we go to topic number 3. Topic number 3 is really a very easy topic. And you have to be very keen. I'm that kind of a guy who can finish this syllabus very fast without you knowing. And the most important thing, like last semester, nikikufunza MA uanguke, tafadhali tafuta career ingine. Because you are unteachable. Hiyo naanza kuambia from the word go. Yeah, wewe niambie ni kama ni Catholic sister ama father ama carpenter, tukutafutie kitofauti. So long as you are keen, you are attending all my classes, and of course you are an active student, lazima utapenda sana hii subject. So cost estimation techniques. So cost estimation techniques, if you look at your syllabus, you know, at the end of the day, if you remember very well, we said a management accountant is a cost accountant. First of all, our duty is to ascertain. The major duty is cost ascertainment, because there are so many companies outside here that are selling things just haphazardly. You'll get somebody in this case here says, now I want to start a business. I want to start a business. And this business I'm starting, ladies and gentlemen, 𝐢𝐧𝐫𝐢𝐞𝐬. Yeah, so I'm starting a business to sell pens like this nature. So then this guy goes around. So when he goes around looking at the competitors, he realizes a competitor is selling for a pen for how much here? And then without any good reason, he just starts selling his pens at what here? At 5. And many of us, many of our businesses, ladies and gentlemen, then they will always get into so many businesses are selling their products below cost because they never did cost analysis. It's very, very important for you always to do what we call cost analysis. Get to know how much has this pen cost me in form of materials, in form of labor, and rent. Have I been able to apportion rent to this pen? So if I get, for example, this pen is costing me 50 more, come and add what here, somebody? Profit. So profit, for example, you say 10%. So this gives me 5, giving us what at the end of the day? 55. So we sell at 55. Of course, I know at times in this case here, we are forced to sell these goods in this case here in a way that we shall be able to beat company. Yeah, we can charge what we call a market penetration price. So for example, for me to penetrate this market, I can even decide to sell this thing as at what year? 40. Yeah, so that I can penetrate the market, and then later on, after these people discover my product is of high quality, I can now increase the price. But you see, even if I'm going to sell at a lower price, even, I mean, at a loss, it can't be for forever. So I need to know it has to be something I'm deciding on. So I'm going to sell this, for example, for just a year, and then I look for finances to cover that loss. After that, my product will be known in the market, and then I'll be now getting profits like that. But most importantly, ladies and gentlemen, employ a cost accountant, a management accountant who will be able to do costing for you, who will be able to do costing for you. All right. And this costing, we have to do what we call, on the evening class LMS, you are making this unit so simple as ABCD, that is George. SK Money, you are the best of the best lecturer, Wewe. We have just started, Wewe. But thank you so much. So let's go. So we need to know how to estimate what here these costs. And the method that the examiner has been able to indicate in our syllabus, ladies and gentlemen, to use for purposes of our topic number 3 is what they have called regression analysis. So please write there topic 3, and then we start with this first method. Now we are writing now. Even if we have that in the notes, this one, it's computational. We must write. Like last semester when I was marking management accounting, some students are also funny. They gave us a very easy question like high-low method, very easy. Yeah, but again, you can't blame students. For the many years I've marked and also supervised accounting exams, I think there could be a problem. You just hand over a paper, an exam paper to a student, And then the next thing you start seeing, and I've always assisted them. So you give up to them, it's blue or whatever color, green or whatever color. So you hand up it like this, and then you get a student's pens, all of them falling down. Mimi nikiwa mwalimu mzuri namwokotea, kimwekea hapa kakileta chini, nikimwangalia kidogo kwa dhidhi. Unajua kidhidhi, Kikuyu dhidhi ni hapa. Sasa kuona jamaa na sweat. So nawaita nje kwanza na wakansu. Nauliza, must you pass? Is it a must for you to pass these exams? Is it a must? Hakuna kitu kama must in this world. Mbona sweat? Si unajilipia fees peke yako? Ama hiyo siku mama anataka kuona report form aone kama umepita. Unachukua kifunguo ya post unatembea nao throughout. Anyway, we should not be going to these exams as well with that mentality kwamba we must do what? No, go there knowing that this is just like any exam. There are two possibilities. I could either pass or fail. And if I fail, so what? Not very good talk, eh? You understand what I'm talking about? Because you see in MA, these guys can decide to make like question 1 very difficult. You read question 1 and then you wonder, is this management, accounting, or geography? Then you go to question 2, which resembles like biology. So if you are that mentality that you have to pass, what happens? Sweating. All pens down. International is that? But if you are, for example, like a don't care, you have that don't care attitude, then you'll be able to realize that, hey, question 3 is doable, question 4 is doable, question 5 is. But this guy would say that he has to pass, and question 1 is bad, not to crack. Question 2 the same. This guy will not be able to see anything. Those are those students who will be able to straight away walk out of the exam rooms in the first 30 minutes. 30 minutes here. You simply see them. Or others, in this case here, they leave everything blank. Page number 1, blank page, all of them. And then at the end of the paper, you'll get them writing like God bless the work of my hand. Which hands now? Which hands? Which hands, and you wrote nothing? Which hands? Which hands? We shall overcome. So in this case, you have written analysis. Yeah. So tell us there that this is a statistical. This is a statistical model that is used to develop equations of the form y equals a plus bx. Equations of the form y equals naandika mahali mbaya, wanafunzi wataona vizuri na kidogo. We shall overcome. Yes. So it is a statistical model that is used to develop equations of the form y equals who? A plus. Have you ever seen this kind of an equation anywhere? Like those old days when you were in Form 3 or Form 3 is way back, right? So this is a straight line equation. Of course, you guys used to write it this way. Y equals mx plus what? C. But nowadays we write it like this. Y equals a plus what here, somebody? Bx. What does A stand for? Yeah, in terms of cost, it will be fixed cost. But general straight line, this A stands for y intercept. Stands for y intercept, that A. In form of a straight line. That's a normal straight line. And the B stands for what we call B stands for gradient, isn't it? B stands for gradient. Have you written like that? Y equals A plus BX. And then A equals the y intercept. And then B equals the who? The gradient. B equals the gradient. B equals the gradient. B equals the gradient. Then now regression analysis gives us formulae for getting A and what here? B. So then I'll be able to write this formula for you. This class began at 6 p.m. or 7 p.m. 6 p.m. Miriam. It's a 6 p.m. class. 6 p.m. class. Sorry for missing 1 hour. The beautiful thing is that we normally record all our lessons and we upload them in the learning management system. Unfortunately, which none of my evening student is a member of. That's very bad of me. So, ladies and gentlemen, we start with B. How do we get this B? Using regression analysis. So using regression analysis, to get this B, we normally take n summation of xy minus summation of x, summation of y. all over n summation of x squared into bracket summation of x squared, like that. That is how we get our boy. Sasa mambo imeanza kuchemuka. Wanasema mambo imeanza kuchemuka, hakuna kitu. This is the best subject in CPA. Best subject in CPA. And then, ladies and gentlemen, having gotten that, how do we get our A? To get our A, we shall take summation of y, be summation of x divided by what here, somebody? N. So anytime they want us to give them the value of b, this is how we shall be getting the value of b, and this is how we shall be getting the value of what here? A. So before we look at our past paper, I will give you a small illustration. So we have here x, and then we have y, x and y, x and y. So x in this case here is 5, 8, 11. And then y in this case here is 7, 13, 18. And then we are told regression, give us a regression, give us a regression equation. Give us a regression equation. So that's an illustration, right? I'll be able to explain what this N stands for, eh? I'll be able to explain what this N stands for. And remember, I will give a present before I disappear. I shall be able to give a present. Be very keen with these formulas. So that if I ask you a formula, and then you look at me straight on my face without looking elsewhere, give me the formula of B, give me the formula of A, I give you 1,000 bob. Yes, I will give you 1,000 bob. Yes. All right. So we want to get a regression equation out of this. We want to get a regression equation out of this, So this is our x. This is our x. This is our y. Don't write again. So 5, 8, 11, 7, 13, and whenever you look at your past papers, really, we have so much in form of these regression equations. What you need to do is to come and create some 2 extra columns. The first column will be xy, and then the second column will be what here, somebody? X squared, yes. Those 2 columns are very, very important. So can you kindly create them and then you fill them up? Kindly create them and then you fill them up. Abracadabra. Abracadabra, life is good. Life is good. Abracadabra, life is good. So you create columns. Life is very good. So xy means we multiply, isn't it? Xy means we are multiplying. Xy means we are multiplying. So 5 times 7 gives me how much? 35. Thank you. How about 8 times 13? 104. Thank you very much. 11 times 18? 119. 198. Thank you so much. Now, one day I remember some student having written like this. I asked them, what is x squared? Then somebody told me 10. Then I wondered, what has this ninja done? So it's like they took 5 times 2, isn't it? So when we say 5 squared, it means 5 times 5, isn't it? After all, it is in your calculator. So 5 squared, this gives us what figure? Somebody here? 25. 8 squared gives us 64, right? And then 121. Now from there, come and give us the summations now. Because those things you saw us writing down were summations. So give me the summation of L. You are adding the 3. 5 plus 8 plus 11. 5 plus 8 plus 11. 20? 24. 24. 24. Then go to the y. Y will give us summation of y. I'm told it's 38. How about summation of xy? 35. So summation xy. This will be equal to who? 3, 3, 7. And then I'll come and give us, please write those summations like that. 210. Summation of x squared, 210. 220, please add using your calculator. Add using your calculator. 210, eh? 210. Now, ladies and gentlemen, that hour is now the one of giving you 1,000 shillings if you recite my formulas. You look at me on my face, and then I'll be able to give you 1,000 bob if you answer my question. Are we ready? Are you sure? We are ready, right? So you're not looking aside. No, my brother. Don't look down. You're looking at me, right? So we start with you. What is the formula of A? A equals A, yes. No, you are checking. You are checking. Uh, and of course, I can see everybody's trying because they expected me to ask for what here for B. And the B I know you have mastered now. B equals who? N summations of xy minus over minus squared, isn't it? So let's try substituting. So we know what our N is in this case. The point. 1, 2, 3. N is 3. The number of points, xy. So N is 3 there. N is 3. I wish I had also tried an online student. Remember, for the online students, what do we normally do? We ask you to put on your camera, right? Yeah, and then you shall not look at any place. You only look at me like this. You only look at me like this live, and then once you get it right, you get 1,000. You get 1,000. So we are substituting all of us, isn't it? So N is 3 times sigma xy. What do we have for our sigma xy? Oh, niko peke yangu. No wonder mpati zawadi. Summation of xy is 337. 337. Yeah, abracadabra. Summation of x. 24. Summation of y. 38. Great. Thank you. Yeah, great. And then now we have, ladies and gentlemen, down here, and I can see my laptop is going off anytime. Unfortunately, I forgot my charger. Actually, it has really served me the whole day without a charger. International what is that? So the online students mkiwa mmezima mara moja, msiseme mwalimu ametufukuza. Hapana. Ni bahati mbaya, lakini tumesoma pia sana. Tumesoma sana. N, Sibaru N3. Sigma x squared. What is our sigma x squared here? 210 minus into bracket sum of x, which is what here? I'm alone, but I will overcome 24. And then we square. So then go ahead and give me the numerator. Please carry out the numerator alone. So say 3 times 337 minus 24 times 38. Just 9 like this. 99. Thank you so much. Then go ahead and give me the denominator. Denominator is 50 what here? 54. Can somebody else confirm that 54 is correct? The online ninjas, are you able to get these numbers? Online ninjas, are they able to get these numbers? Please confirm. The online ninjas, please confirm. Thank you so much. So give me 4 decimal places quotient. 1.833. 1.833 like this. Yeah. 1.833. Thank you so much. 4 decimal places. 3. So then having gotten B, we should be able to go ahead and get what here? Somebody. A. So our A will be equal to who? Is there somebody who is able to remember the formula? Summation Y minus B summation X over, you've tried, but you have struggled a little bit. No, don't worry. I will be able to get you in a moment. So summation Y, do we have summation Y? So summation Y is what here, somebody? 38 minus B, which is 333, isn't it? Times summation X, which is what here? Summation X is 24, isn't it? And then everything to be divided by who? Number of points. N is number of points. And how many points are they? There are three, isn't it? 3 points. So then can you kindly give me the numerator? Kindly give me the numerator. Kindly give me the numerator. 38 minus 1.8333 times 24. 38 minus 1.8333 times 24 will end up giving me what figure? Negative 5.99. There are three of them. Aha. Ah, okay. Two of them. Like that, right? Oh, 999 and then 2 over 3. So then the final answer for A will be equal to who? Negative 1.9997. Thank you so much. So then that is it. That is it. Once you write it like that, you've been able to get the values of A and B, then we'll be able to come here, ladies and gentlemen, and write the equation for us. You'll be able to come here and say y equals A plus who? Bx. Now you have the value of A and the value of B. So A is negative 1.9997 plus B, which was what here, somebody? 333, what here? X. So then the time for testing somebody for 1,000 now this time around is a gentleman and he's saying he's ready. Don't assist him, please, right? Don't assist him at all. So the 1,000 is yours and the speed is of essence. So B equals what? I try you. You're ready for 1,000 bob. Very good, sister. A equals who? Are you looking at mine here? Nobody wants to get my 1,000. So because I've seen you have struggled with A, let me just come back to you, but now with B. What is the value of B? I mean, formula for B. So then who is ready for my present? I don't want to go home with my at the back, right? So from a sister, we wait. No, wewe unaangalia bado bwana. So we go back to him. B. Let's give him a chance, right? Uh-huh. Mm-hmm. Can deserve 1,000, right? Ana deserve. Ameng'ang'ana sana. So iko wapi past paper zenu tufanye past paper moja tukifunga. Now, wanafunzi wa online, is there somebody who is willing to put on their camera? We also test them. We give them, Yeah, nichie kijana kwa reception hapo anaitwa Clinton, Clinton kwa reception. Mkona past paper sama bado hamjapatiwa bado. Kuna link, Haya, hebu sasa wewe pia upate 500, tafuta swali ya regression. Tafuta swali ya regression hapo ndani. Tuma link kwa group sister, Tuma link. Mpata? And then remember, in all my classes, there shall always be what your presence quiz. Like now this Saturday, kuna mwanaume amepata present pale 1,000. Leta simu yangu mtumie. Leta sasa hivi mtumie. Msichana hajapata bado regression, so so like wanafunzi wa section 5 evening advanced financial management, they have become so good. After class, hawaendi home immediately. Wanabaki nyuma wanafanya assignment zangu zote. So to reward such a class this Saturday, I'll be having lunch with them at Sarova Stanley Hotel. All of them on Saturday. Yeah, on Saturday at 12. Should I invite you? But you haven't done anything really. Link haifunguki, download the paper itself, eh? So the physical online students, you are missing so much. Ukipata chance, unakuja unasoma na sisi hapa physically, eh? Great. Hujapata present. Kila klasi yangu lazima kuwe na present. Present. Maximum 3,000 every class. Oh, George is ready, eh? But now, George, given my situation with my laptop, I will remember to give you something in our next class. Thank you so much. Yes. December 2025. Una zawadi yako imeenda madam, na ulikuwa wa kwanza. Ya huyu imeenda. December 2025. Kimani nasema si atupati, itakuja. Itakuja yako, don't worry Kimani, wewe. December 20. Si mchana niliwabaia nyote airtime, wanafunzi wa mchana nyote. Na mlikuwa wengi sana, isn't it? Eh? Wako online now. Wanawabaia wote. What timing, eh? Okay. Kesho, eh? Uliingia hiyo ya leo? Ulijua ulipata link wapi? Walituma kwa group. So what is the very best timing for you? Lunch hour, eh? 12 is okay. Wanasema wa online wako wachache wapatiwe ya cabbage. Hiyo ni cabbage ni pesa ngapi? Cabbage ni pesa ngapi? 30 bob.